Here we go with that S&P 500. We told everyone a few weeks ago, yes, you had a little counter rally. It's giving it all up. And it had a big haircut and it's breaking below that key support level. And it's sitting right here at 1630. This is a weekly. The weekly moving average is that 20 week that we talked about all month. And when the Nasdaq got shut down last week, there was a lot of stuff going on in these exchanges. The correction is the same correction. We said the summer rally was over. Any counter rally for the bull would be to sell the stocks, period. And by selling them, is that you're getting out up here where we were getting out up at the highs. We're at critical levels on that S&P. Another moving average that's being totally violated here, and it's going to be very, very important for people to understand, is this 10-week, which is this dark blue line. The 10-week moving average is this upper line that it broke right at the high of this weekly bar. So the correction that we have called for still has a lot more downside to the S&P. So the 1700 puts for the September and October are definitely the big pairs. The bears that we featured, the bear funds, the bear ETFs, they're all paying nicely. And as we go through these critical levels of a 10-week moving average and a 20-week moving average, that's this pink line right here, is that we don't have, once we come down here to that 1600 level, that 1630, like I said, was a major support level. As we work our way down, we had that nice correction that we called on May 22nd here. Then we rallied up to all-time highs. And the month of August has been totally taken the bull totally down. The S&P today is down 26.3 handles. That's minus 1.59% on the day on the S&P. So the analysis was before the fact. It was knowing how to sell at the highs, and that correction is not over and will continue to correct even further on the S&P 500. So the S&P 500 is in full correction mode and confirmed with the analysis that the top was here. The top was here. It's the second reversal. I have told people that we were going to have a 10% correction going in to the fall period. That is the shorter time frame. If things don't improve economically, the longer term correction could be 20%. Now, is the bull going to want to admit it? No, he's not. But look, it's been a great bull run. And every time we get the pullback, they made the higher high. The problem is they don't get the fundamental data, fundamentals. That means that people have to make money in corporate of America. There's a big disconnect to the valuation to where the earnings trough is in the S&P 500 cash earnings. That's 500 stocks combined in the S&P 500, and you have a major technical breakdown just as we had called for, and it will continue to get worse. So any rally up to resistance, you better sell it because it will roll over and make lower lows.